While Oprah has a few of her favorite things to buy for Christmas, we have a few of the favorite tax deductions of the wealthy. Our tax man, David Elyashar of Horwich, Coleman, Levin joins us on set. Good to have you back on the show.
Thanks for having me.
Now, according to CNN Money, gross earners or taxpayers bringing in $250,000 on average took deductions of $91,000 in 2010. Congress is about to potentially limit those deductions to maybe down to $50,000. But that means for this year, you can still take some pretty decent deductions, true?
Correct.
All right, so let's talk about some of the top deductions for the wealthy, starting with state and local income taxes.
State and local income taxes are nice for wealthier taxpayers because, of course, the more money you make, the more you're going to pay in state taxes. And depending on what state you live in, that could have an even more meaningful impact.
The wealthy also love a charitable deduction.
That's right. For wealthy taxpayers, one, they have more disposable income to make charitable contributions. And two, when you're in a higher tax bracket, that makes a more meaningful reduction in your tax burden. And the nice thing about charitable deductions is if you're a wealthy taxpayer, you can contribute appreciated property to your favorite charity and get the deduction for the fair market value of that property. And not only that, but you can avoid, if, for example, you bought a stock many years ago and it's appreciated in value, you can avoid paying the capital gains tax on the appreciated stock.
Another big one is a home mortgage interest tax deduction, and this could be great if you have a few homes perhaps.
That's right. It's a nice deduction for the wealthy because wealthier taxpayers may have their main home, but they may also have a second home. And so you can deduct the mortgage interest on loans up to $1 million and also up to $100,000 on a home equity line. So wealthier taxpayers are more inclined to take out loans of that size, and that'll have a nice, meaningful impact on their tax returns.
At the end of the day, these are deductions just about everybody should be taking, though, correct?
Correct. Everybody can take these deductions, and the deductions that we named today have a dollar for dollar impact on your income, so everybody should be on the lookout and taking these deductions on their tax return.
David Elyashar, always a pleasure. Thanks for coming on the show today.
Thanks for having me again.